So, Petar, let's talk a little bit about your process, and maybe you could share the screen with
Okay.
us and kind of just walk us through your morning routine, because you said routine is very, very important. You really started to become a profitable trader when you went to a routine. So, please tell us a little bit about your daily routine. What do you do? How do you set things up? So we could kind of learn from you.
Okay. So I'm starting my routine will start with the preparation work the night
Okay.
before, right? And I usually will go to the daily chart, um, watch my major currency pairs. I'm mostly oriented around the major currency pairs: euro dollar,
Hmm.
pound dollar, USD yen, USD CAD, eventually
Okay.
Australian US dollar. So I'm sticking with most liquid stuffs, which are most liquid on the futures market, and
Okay.
there is a more interest from the bigger players, let's say, on that way,
Oh, can I
and
just,
most
sorry to
liquid.
interrupt you. Do you trade spot or do you trade futures?
I trade both, right? I,
You trade
I, I trade
both.
on the futures market and I trade on cash, yeah, like spot
Interesting.
FX
That's
prices.
that's very, very unique. Okay. How do you it's just sort of a side question. How do you find the difference between the two? Do you find, is there any
Yeah,
peculiarities
there's
between
a
the?
good and bad stuffs. So futures got a pre-leverage. It's pre-leveraged market. You cannot define leverage by yourself. If I
Right.
go to spot FX price, I can define leverage. I want to. I don't need to. I don't need. I don't have a need to have a leverage like on the futures. There is a pre-leveraged stuff, and that's all for everyone. It's like that.
Okay.
It's just how many
Right.
contracts you want to buy or sell. But
Right.
on the spot FX, I can decide whatever. I can increase leverage, decrease leverage. I can be
Right.
unleveraged. So I have that flexibility on spot FX. That's why I combine.
I see.
If I
Do
really
you ever do you
some,
ever
if I really
trade
like,
futures against
yeah.
spot? Like on one side, like you're long euro dollar spot, short euro dollar futures, or do you ever do those
No,
kind of trade?
no. I just define where is if there is a something, and I also define. I don't like the fixed risk, so like that I risk always the same on every position.
So I'm
I
sorry.
judge based on my
You
experience.
you don't, or you do have a fixed risk? I didn't quite
No,
understand.
no, I don't have. So if I like I have a
Ah,
maximum daily risk
I
that I
see.
never go. But
Okay.
if I like something more, let's say like for example pound dollar more versus USD yen, I will invest more of my daily risk into pound versus USD yen. They both can
Uh,
provide opportunities, but opportunities for me not equal.
Understood. So you have a budget, and then you
Yep,
decide how you're going to spend that risk budget every day.
exactly.
I see. So, and
The
what is
thing
that
that I
risk
like
budget for you?
most, yeah, the thing that
What,
I like most, I
yeah.
invest most of my budget there. The thing that I see that there might be some potential, I invest less. If they evolve, they evolve. If not, not a big deal. I didn't have a
Right.
big investment there. So
So, what is your daily budget? Like, how much do you give yourself as
usually
risk?
1.5% is my
One and a
daily
half
max
percent.
risk for all of operations. So no matter
Okay.
if I trade 4 free setups, one position, free position during the day, I have a limit. If there is a 1.5 drawdown for that day, I'm out for that day. I go take a
Right.
walk and watch next day, basically.
How many times a month do you have to take a walk?
Not so many, to be honest.
That's
There are
good.
some weeks are actually very good. Some weeks are fully positive. Some weeks are not that good. But
Right.
from time to time, I take walks.
I can
It's just like
imagine.
that. I mean, not very frequent. It's good stuff, but
Right.
definitely, yeah,
So,
I do.
so you have a budget, and then so
Yeah.
you were telling me you come in, you look at dailies. Maybe you could just give us a little bit more of the specifics
Yeah.
of your
So I
routine.
look. This is one model. This is also the Linda Rashke explained this. This is a very
Mm,
simple model based on the Taylor rhythm, basically the cycle.
okay.
It's a cycle where we have. This is a rate of change indicator with period two. Usually, if we have like 2 to 3 down days, you expect third day to flip or fourth
Okay.
day to flip. It's
I see.
basically it's based on the pretty logical statistical approach. If you check the weekly daily candles, it's a very rare you will see that we have a consecutive bull bars or bear bars, like 5 bull bars in a single wick or
Right.
5 bear
Right.
bars.
That's very rare. Right.
So it's basically going with the cycles, and usually the Taylor defined that many years ago. There's a 2 to 3 day cycle. So for example, this is what I like to watch pound. It's a very hot. Pound is very hot, for example, for me this morning, because
Okay.
pound got 2 down days. You see the 2 down trend days here?
Yes. Yes.
And today is the rate of change flipped to the upside. You see this flip here?
Yes.
Relative
Yes.
to this? And today should be a buy day. And then I go and explore from that model. I go
Right.
intraday chart and see how the intraday chart is behaving. If it's confirming my model my larger time frame model, then I have a
Right.
good opportunity.
Now, on the intraday, is what particular time frame are you on the intraday?
On intraday, I'm watching almost still 5, 30, 2 hour. 5 is
Okay.
more for execution, is
Right.
exactly pound
Does
is
it,
pretty
so
hot.
does that look good to you right now? Actually.
Yeah, it is. It was
All right. Let's
also.
buy it. Let's buy it. We'll make our first
Yeah,
trade of the day. You want to get
let's
long?
buy that pound.
Let's buy it.
Let's
Let's get
buy
long pound.
with some high risk. Let's put some bigger size here,
Oh, look
because
at
this
you.
is
I
the
love
most.
it. I love it.
Let's
You're my
put
kind of guy.
5 lots.
Beautiful. Look at this. Get size. Now looking. So just sort of
Put the
looking at
stop
your process.
below for now.
Yeah.
Now, put the stop below. Let's say 1.3380.
Okay.
Just, switch this. Okay.
Right.
Put there.
And look to see if New York can extend that move higher.
Yeah.
On the move.
Yeah.
Great.
This was the pullbacks. We're having the higher lows. So
Right.
I suppose if we take both previous lows on 30-minute,
Okay.
I'm out. If this hold, then I will have a target. We can also set target here. Let's set target. I will go to trading view just to find where is my target. We can use the 30-minute. We see some single prints. This is a profile I'm using also on the one screen profile.
Correct.
We can use the single prints like a target, for example. It's a bigger target. I'm also watching 1.3415, but definitely 1.3430 and area around 440, 430,
Right.
440. Let's
Now,
place
just to let our viewers know, market profile is a tool many professional traders use to show them where there was a lot of transactions at any given price level. And the less transactions there are, the most likely that's going to be the resistance level. Now, is this a market profile on spot, or is this a market profile on futures?
This what I'm watching right now. TradingView, they provide just a volume profile, but it's a very similar. I think 97% is the same. It's the same feeling.
Right.
So yeah, it's providing where we got most of the price action. The
Right.
area we call the ledges, you can call distributions. The
Right.
more we are basically trading around specific level, the bigger this ledge or distribution will be on the profile.
Correct.
And what this is meaning is that price and participants are accepting this like a fair value. They're accepting this price they want to conduct their businesses, and yeah,
so that would be your natural target at fair value.
Yeah,
right?
my target is basically, you see this area where we don't have so much of back and forth trading, this pocket area here.
Yes.
This will be my area because price will tend to retest that area, because price pound literally just dropped here, didn't trade back and forth so many times here.
Right.
And it's usually it's a form of the gap in the price action. Usually price will tend to go in the next days or so to revisit that.